Hello, my dear ones. This is CA Joe's Kurian, and welcome all and everyone who is watching this video. And this is the CA Inter Paper 3A Maha Marathon, that is for the income tax laws. So, friends, what do you mean by Maha Marathon? Very simple. Those areas which are frequently asked for the past 10 examinations, we have summarized these areas in a way that if you are a student who is about to write your May 25 or September 25 or Jan 26, or if you have a CMA Inter students who is about to write your June 25 or December 25, this session will be super beneficial for you because we have crisped and we have summarized and we have conceptualized all the frequently asked areas in your paper 3A income tax laws. So friends, this session is intended for three category of students. Category number one, those students whose DT revision is completely over. That subject is, you have completed that subject in a super manner. For those students, and you want to know that which all are the frequently asked areas in your paper 3A income tax law. For this, you need to watch this entire video and you will understand which all are the frequently asked areas and what all are the important questions to solve. That is category number one. Category number two, your revision is over. You have studied DT or direct tax in just once. And now you are so sure that you don't have enough time for your complete revision. Second round revision or third round revision, you don't have time. Those students, you watch this video, you will be able to know which all are the super important areas so that you can spend your time, you can invest your time wisely. And the third category is the best category. That means if you are a student who have been covered your DT very well, you haven't covered your income tax paper 3A very well, and you are so sure that you don't have enough time to complete your entire studies and you want to invest minimum time to get maximum marks. That means which all are the areas that you have to study to get the maximum marks. For this category also, this revision is applicable. For all three category students, please be attentive. Watch this entire video. Sit silently. You carefully attend this particular series and this will be beneficial for you, that's for sure. So starting with the first chapter. First chapter is the second chapter as per the order. So that is the residential status and scope of total income. That is the first topic that I'm about to discuss. So let's understand which all are the areas that you have to cover under this particular chapter, residential status and scope of total income. So as the name suggests, it is for determining the residential status of a person as well as for determining the scope of total income of a particular person. So first of all, let's understand what is this, how to determine this residential status. Residential status of individuals, that's what we are about to discuss first. So listen friends, first of all, in an examination question, if they are asking you to determine the residential status of an individual, all right, what you need to do is you need to identify the type of assessee that they are testing. Rather than simply counting the days of stay in the question, first you should know what exactly is the type of assessee that they are testing in examination question. So there are different types of assessees. Let's understand which are the types of assessee for determination of residential status. Starting with the point number one, that is if you are an Indian citizen during the year and you have left India for the purpose of employment outside India. Say you are an Indian citizen. In the question, it is written that, say Mr. A is an Indian citizen. He left India either for the purpose of employment, which is outside India, or you have left India as a member of a crew of an Indian ship. You have left India either for your employment purpose, which is outside India, or you have left India for the purpose of what? As a member of a crew member, as a crew member of an Indian ship, either for employment or as a crew member of an Indian ship. You have left India. For you to become resident in India in the relevant previous year, there is only one condition that is applicable, that is 182 days or more stay in India during that year. Say for example, for your upcoming examination, your relevant previous year will be 2024-25. For your upcoming May or September or Jan 26, your PY will be 24-25. So in this PY, if you are a person who left India for the purpose of employment or as a crew member of an Indian ship, for determining the residency status, you need to check only one thing, whether you have stayed in India in the year 24-25 for 182 days or more. If the answer is yes, then you will become resident. If the answer is no, you will become non-resident. What do you mean by days of stay? Days of stay means the number of days that you have stayed in India, that's it. Now, How do you count the days of stay? Very simple, friends. Both the date of arrival and the date of departure have to be counted as if you are in India. For example, I visited today and I've left tomorrow. So 2 days you are in India. You don't have to take that 24-hour cycle and all. The date of arrival and the date of departure both have to be counted as if you are in India. Now, that is point number one, residency status of individual. Indian citizen during the year left India for the purpose of employment outside India or as a member of a crew of an Indian ship. Only one thing, 182 days or more stay in India. That is the criteria that you have to check. Now, second type of assessee, that is Indian citizen or Indian origin resides outside India, comes on a visit to India. Say either you are an Indian citizen, alright, or you are an Indian origin. Indian citizen means you have the citizenship, you have the voting right in India. Indian origin means your parents, grandparents, etc. are a part of divided or undivided India. So either you are an Indian citizen or you are an Indian origin and currently you are residing outside India. Right now you are maybe you are in a business which is overseas, or you are doing some profession in a foreign country, or you are in any employment in a foreign country. You are residing outside India. Outside India means you are either doing some business or profession, or you are in an employment which is outside India. And this year you have visited India either for what do you say, meeting your relatives in India, or for some festives, or for some tour purpose, whatever it is. Basically, you are an Indian citizen or an Indian origin. Currently, you are residing outside India, but this year you visited India, whatever the purpose is. In that case, in examination, if the assessee is in this category, then the one thing that you have to check is whether this person's total income from Indian source in that year exceeds 15 lakh. Say for example, in the examination question, they are saying in the year 2024-25, Mr. A residing outside India comes on a visit to India. Mr. A being an Indian citizen, he normally resides outside India, but in 24-25 he visited India. If they are saying like this, the first thing to do is not to count the number of days. Rather, you need to check whether this person's total income from Indian source. What, friends? Total income from Indian source, whether that exceeds 15 lakh or not. If it is exceeding 15 lakh, then condition number one, either he have to stay in India for 182 days or more in the relevant previous year, or he have to stay in India for 120 days or more in the relevant PY plus 365 days or more in 4 immediately preceding previous year. Say for example, friends, it's pretty simple. Say in the question they are saying Mr. A is an Indian citizen doing some profession outside India. This year he visited India. If they are saying like this, first thing to do is what? You have to check whether in 24-25 his total income from Indian source, whether it exceeds 15 lakh. How to compute the total income from Indian source, that I'll tell you later. Okay, for the time being, total income from Indian source, that simply means his Indian income. Okay, but there is a definition for the word total income from Indian source that we will deal later. So if total income from Indian source exceeds 15 lakh, and then you have to check whether he has stayed in India for 182 days or more. Whether you have stayed in India for 182 days or more in the relevant previous year. If the answer is yes, then don't check anything, he will become a resident. If he haven't stayed in India for 182 days or more, then one more alternate condition is there. What do you mean by alternate? Either 182 days or more, or you have stayed in India for 120 days or more in the relevant PY. Then you have to check whether you have stayed in India for 120 days or more in 24-25 plus 365 days or more in 4 immediately preceding previous year. That means in 24-25, you need to check whether you have stayed in India for 120 days or more. Along with that, he should stay in India for 365 days or more in 4 immediately preceding previous years. Immediately preceding previous year means 23-24, 22-23, 21-22 and 20-21. All together, you count the total days of stay for all the 4 years. If that exceeds 365, or if it is 365 or more, 120 is there plus 4 preceding previous year, total days of stay is more than or equal to 365, then also he will become a resident. So friends, point is pretty simple. If you are an Indian citizen or an Indian origin residing outside India, comes on a visit to India this year, then you need to check whether his total income from Indian source is more than 15. If the answer is yes, that means if it is more than 15 lakh, to become resident, either 182 days or more stay in India, or there is an alternate condition. 120 days or more stay in India in the relevant previous year plus 365 days or more stay in India for immediately 4 preceding previous years. Now the point is he will become a resident on satisfaction of either any alternate, either one or two, he will become a resident in India. Now next point is, what do you mean by this? Indian source income, total income from Indian source. Total income from Indian source includes income accrued in India. If income is accrued in India, you have to consider it as an Indian source income. Income first received in India also have to be considered as an Indian sourced income. Income accrued outside India due to business control from or profession set up in India also have to be considered as an income, total income from Indian source for the purpose of determining this 15 lakh. Are you with me? Three things have to be considered as total income from Indian source. Number one, income actually accrued in India. Second thing, income received in India. And the third thing is income accrued outside India due to business control from India or profession set up in India. All these three things have to be counted for determining whether his total income from Indian source exceeds 15 lakh or not. But while doing that, while computing the total income, you can deduct all the expenses. You don't have to consider the gross income. You can net off the expenses. You can claim standard deductions and you can claim exemptions. Say for example, in the question they are saying 10 lakhs is the total income, say rental income that is getting from India. If they are saying gross rent received is 10 lakh, you can definitely deduct what? Municipal taxes. Say municipal taxes is 1 lakh. You can definitely deduct municipal taxes. Then on the net annual value, you can definitely claim what? Standard deduction at 30%. 30% on 9 lakh will be 2 lakh 70,000. Only the remaining amount shall be taxable as income, as the total income from Indian source. Are you all with me? So friends, be careful. Only the remaining income means 6 lakhs 30 shall become the total income from Indian source. So be very careful when they are saying total income from Indian source. You don't have to take the gross income. You can definitely claim the expenses, standard actions, and you can claim exemptions if any. Say if they are saying agricultural income from India, you don't have to count it because agricultural income is technically exempted under 10 subsection 1. So that's what I'm saying. You can deduct all the expenses, you can claim standard deductions, you can claim exemptions, etc. while computing the total income from Indian source. So three things you have to consider. Number one, income accrued in India. Number two, first received in India. And number three, income accrued outside India due to business controlled or profession set up in India have to be considered for the purpose of determining whether the total income exceeds 15 lakhs or more. If it exceeds 15 lakh, two things, 182 days or more plus or not plus 182 days or more or 120 plus 365. Now moving on, what if his total income from Indian source does not exceed 15? That means if it is exactly or equal to 15 lakh, how to determine the residential status? Say you are an Indian citizen or an Indian origin residing outside India, comes on a visit to India, and your total income from Indian source is exactly 15 or less than 15 in the relevant PY, then what to do? In such a case, there is only one condition applicable, that is stay in India for 182 days or more. That is more than sufficient to determine the residential status. So friends, pretty simple. Second category is Indian citizen or Indian origin residing outside India comes on a visit to India. First thing to check is whether his total income from Indian source is more than 15 lakh. If the answer is yes, two alternate conditions are there. Either 182 days or more stay in India or 120 plus 365. If his total income from Indian source is less than or equal to 15 lakh, only one condition, that is 182 days or more stay in India shall become applicable to determine his residential status. I hope it is clear. If it's not satisfying this, then he will become a non-resident. Got it. Third category. What is the third category? That is an Indian citizen plus having total income from Indian source more than 15 lakh during the previous year plus not liable to pay taxes in any country due to his residential status. Say for example, I am Mr. A, an Indian citizen. This is not applicable for Indian origins. This is only applicable for Indian citizens. Okay. Say I am an Indian citizen. Currently I am residing in a tax haven. Say Mauritius. I am residing in Mauritius, which is a tax haven. Tax haven simply means the country where they doesn't charge any income tax. Okay. I am staying in a country where they doesn't levy any income tax. So I am not paying taxes at all because of that residential status in that respective country. I am not paying taxes anywhere. In that case, what department say? You are an Indian citizen having total income more than 15 lakh in the relevant previous year from India, and you are not paying residential status. Why? Because, sorry, you are not paying taxes. Why? Because you are a resident of a tax haven. due to your residency status, you are not paying taxes anywhere. Don't worry. Welcome to India. You shall be deemed to be a resident in India. So I'll repeat that again. For becoming, we call it as a deemed resident. Deemed resident. We call this concept as what, friends? Deemed resident. Who will become deemed resident? You have to be first of all an Indian citizen. This is only applicable for Indian citizens. Plus your total income from Indian source more than 15 lakh during the previous year. How do you determine the total income from Indian source? Same as above. Income accrued in India plus first received in India plus income accrued outside India due to business controlled or profession set up in India have to be clubbed together. And while claiming that, you can claim the expenses, you can claim standard deductions, you can claim exemptions, etc. etc. So total income from Indian sources more than 15. Exactly 15 also, this is not applicable. It should be more than 15 during the relevant PY. Plus, you are not liable to pay taxes in any country due to your residential status. So you have managed your residential status in a way that you are either a resident of a tax haven or you are not a resident of any country, so that you are skipping your income tax liability. In such a case, department will say that you shall be deemed to be a resident in India. Alright, so that is category number 3, which is applicable for Indian citizens only. Moving on to the category number 4, that is for the other individuals. Say you are not an Indian citizen, not an Indian origin, and you are some other individual, say Mr. A, who is an Australian citizen. For other individuals, how do you determine the residency status? 3 individuals we have already covered. Number 1, Indian citizen, left India for the purpose of employment or left India as a crew member of an Indian ship. Category number 2, Indian citizen or Indian origin residing outside India comes on a visit to India. Category number 3, Indian citizen having total income more than 15 lakh plus not paying taxes anywhere shall become a deemed resident. Now, category number 4, other persons. For other individuals, how do you determine the residency status? You check whether his days of stay in India is 182 days or more. In the relevant previous year, you have to check whether his days of stay in India is more than 182 or 182 or more. And there is one more condition, that is 60 days or more stay in India during the previous year and 365 days or more stay in India during 4 immediately preceding previous years. So very simple, friends. If I am under this other individual category, you need to check whether in the relevant previous year I have stayed in India for 182 days or more. If the answer is yes, I'll become resident. If the answer is no, then I have to check the second alternate. What is that? Whether in the relevant PY, that is 24-25, I've stayed in India for 60 days or more. Along with that, I have to check in the 4 years, preceding years. That is 23-24, 22-23, 21-22 and 20-21. In 4 preceding previous year, my stay is 365 days or more. That means in the relevant PY 60, in the 4 immediately preceding previous year, it is 365 days or more. In that case also, I'll become a resident. And I'm not satisfying 182, not satisfying 60 plus 365, I'll become a non-resident. So this is how you have to determine the residency status. So the first thing to do whenever they are asking a question in relation to individual, you need to identify the type of SSC. 4 types are there: Indian citizen left India for the purpose of employment, or Indian citizen left India as a crew member of an Indian ship, or an Indian citizen or Indian origin who is residing outside India comes on a visit to India, or an Indian citizen having more than 15 lakh income not paying taxes anywhere, deemed resident. So, and other individuals. So you need to identify the type of SSC, and based on the type of SSC only, you need to think what is the eligible criteria. Then only you count the number of days so that you can save time. You will always get the right answers. You will never go wrong, and you can score very good marks from this respective chapter. Okay friends, so once residential status is determined based on the type of persons or type of SSCs, now the next thing, once if a person is a resident, then there are 2 possibilities, that is ROR and RNOR. What is ROR? Resident and ordinary resident. Resident and ordinary resident means you are a resident this year and the past years also you are a resident. What is RNOR? Resident but not ordinary resident. That means this year you have become a resident, but in the past year you are not normally a resident in India. So once a person is a resident, then you need to check whether he is a ROR or RNOR. That is also important. Now what they are saying is RNOR is a person who satisfies any of the following conditions. If you are a person and you satisfy any of the following 4 conditions, then you will become a RNOR. And what is the full form of RNOR? Resident, not ordinary resident. So let's understand, if you satisfy any of the 4, you will become a RNOR. And what is point number 1? Say if the relevant previous year is 24-25, you need to check the residency status for the past 10 previous years. Past 10 means 23-24, 22-23, likewise up to 2014-15. So in the relevant PY, you have become a resident. You go check the residency status for the past 10 years. For the past 10 years, each and every year you check the residency status. In that year, you are a non-resident in 9 out of those 10. So you do one thing, you have become a resident in this year. You go check the residency status for the past 10 years. Out of the past 10 years, in 9 out of 10, minimum you have become an NR. Then you will become a RNOR. So 9 out of 10. Or rather we can say 10 out of 10 you are become a non-resident. Then also it is fine. Only after 9 it will become 10. So you are a non-resident in either 9 out of 10 or 10 out of 10. More happy, you will become a RNOR because you are a resident this year, but for the past year you are not usually a resident in India. That is what is the concept is called. So the point is very simple. In the past 10 previous preceding years, you go check the residency status for the each and every year. Then you determine whether you have become a NR in 9 out of 10. So don't forget NR in 9 out of 10 past preceding previous years. If you satisfy that, you will become an RNOR. If you are not satisfying that, check the second one. What is the second one? Days of stay in India is 729 days or less in 7 immediately preceding previous year. So in the year 2024-25, you have become a resident. You go check the residency status for the past 10 preceding previous years. Past 10 means for the past, sorry, not for the past 10, past 7 preceding previous year. You need to count the total days of stay. That is the first condition, okay? You need to count the total days of stay for the past 7 preceding previous year. If your total days of stay is 729 days or less, that means out of past 7, you have stayed in India for only 729 days or less. In that case also you will become a RNOR. So two things. Either you go check the residency status for the past 10 preceding PY. Out of the 10, in 9 you are an NR. Then you will become RNOR. Second one. You go take the total number of days of stay in India for the past 7 preceding previous year, not the relevant year, past 7. Excluding the relevant year, past 7 you go and count the total days of stay. If your total days of stay is 729 days or less, in that case also you will become a RNOR. And you are not satisfying one, not satisfying two, then go check the third one. That means if you are a deemed resident, you will automatically become an RNOR. And you tell me who is a deemed resident? Deemed resident means what? You are an Indian citizen having more than 15 lakhs income from the Indian source in this relevant PY, and you are not paying taxes anywhere due to your residency status. You shall be deemed to be a resident in India. So if you are a deemed resident, again, what we need to do? We have to consider that you are a RNOR. And what is the final condition? That is, you are an Indian citizen or Indian origin and become resident due to that 120 plus 365 day condition. You are either an Indian citizen or an Indian origin and you become resident due to that 120 plus 365 day condition. In that case, again, you will become a RNOR. So friends, to become RNOR, 4 possibilities are there. Possibility number 1. In 9 out of 10 preceding previous year, either you have to be minimum 9 out of 10, you have to be NR. Possibility number 2. In the past 7 preceding previous year, your total days of stay in India should be 729 or less. Possibility number 3, you have to be a deemed resident. Possibility number 4, you have become a resident due to that 120 plus 365 day condition. In any of these 4, you will become a RNOR and you are satisfying none of the 4. You are not satisfying any. Not satisfying any. That is, none of the conditions are satisfying. Then you will become a ROR. Not satisfying 1, 2 or 3 or 4, then you will become a resident but not ordinary resident. And this is what they are saying about the determination of residential status of individuals. I hope this much is clear for you. This is how you determine the residential status of an individual. Moving on to the next one, determination of residency status of HUF. This also you have to study. So, residential status of Hindu undivided family. How do you determine the residential status of Hindu undivided family? Very simple, friends. You need to determine the residential status of a Hindu undivided family based on control and management of its affairs. If an HUF is controlled or managed either wholly or partly in India, then that HUF will become resident. Control and management doesn't mean the place where they does their business. Control and management simply means from where those businesses are getting controlled. Say for example, I'm a family residing in Dubai, but my business is in, say, Chennai. So I'm a family residing in Dubai and I'm doing business in Chennai. So the place of business is in Chennai, but the residential status of HUF will be Dubai because it is getting controlled from Dubai. So the residential status in India will be NR. That is the point. So the control and management is the place where the business is getting controlled. It is not the place where they are doing the business. I hope you're getting my point. So if you are an HUF, your control and management is either wholly or partly in India, you will become a resident in India. If your control and management is wholly outside India, then you will become a non-resident. Your control and management have to be completely outside India for you to become a non-resident. Now, for HUF also, once you become a resident, you need to check whether you are RNOR or NR. In the case of an HUF also, you need to check whether you are a RNOR or NR. So let's deal with the RNOR first. So an HUF, if it is control or management is wholly or partly in India, it will become a resident. Now you need to check the residential status of its Karta to decide whether HUF is RNOR. Hey, their Karta have to satisfy any of these two conditions. Okay, so RNOR satisfies any condition. Karta is a non-resident in minimum 9 out of 10 preceding previous year. So once an HUF, if it is a resident, you go check the resident status of its Karta. If its Karta is a non-resident in 9 out of 10 preceding previous year, then that HUF will become RNOR. So HUF will become an NR based on its control and management. If its Karta is a non-resident in 9 out of 10 preceding previous year, that HUF will become what? An RNOR. Or if its Karta stays in India for 729 days or less also, HUF will become RNOR. So friends, for an HUF to become a resident and ordinary resident or RNOR, that's what we are studying. For an HUF to become an RNOR, its Karta have to satisfy any of these. Number one, Karta have to be a NR in 9 out of 10 preceding previous year. Or number two, its Karta have to stay in India for 729 days or less in 4 immediately preceding previous year. If it satisfies any of these two, then Karta will become, that HUF will become RNOR. Now, if that HUF's Karta satisfies none, then HUF will become ROR if satisfies none, and this is what they are saying. And this is all about the residency status determination, which are these two are the very frequently asked and most important residency status determination in chapter 2. That is determination of residency status of individual. Number 2 is determination of residency status of Hindu undivided family. Not yet over. We have one more concept before we move on to the most important questions in this chapter. That is section 5. That is scope of total income. What do you mean by scope of total income? Scope of total income simply means based on the residential status, what all are the incomes that are subjected to income tax in India? Based on your residential status, what all are the incomes that are subjected to income tax in India? Which all are your incomes that forms part of the scope of total income based on your residential status? And this is what we are about to discuss right now. So, scope of total income. If you are a resident and ordinary resident, that means if you are a ROR, entire global income will be taxable in India. It is also called as what? Residence rule. So very simple friends, if you are a ROR, resident and ordinary resident, your global income will be fully taxable in India. Whether income accrued in India, whether income accrued outside India, whether it is first received in India, whether it is received outside India, doesn't matter. If you can call a receipt as your income, then that income will be taxable in India if you are a resident and ordinary resident. And how about RNOR? How about NR? That's complete NR. If you are a non-resident, then your income have to be either accrued in India or it have to be first received in India. What do you mean by accrued in India? Accrued simply means right to receive an income arised from India. Say for example, I am Mr. Germany. I am done some services in India and I am getting some payment from Germany. I am Mr. Germany, done some service in India, getting payment in Germany. I've done the services in India, that's why I'm getting a payment. So that right to receive that payment happened from India, and that is what is called as accrued in India. Accrued means right to receive an income that arised from India, then we can say that that income is accrued in India. Second one, income should be first received in India. What is first received? Say Mr. Germany done services in Germany, but I have received payment when I was in India. I'm Mr. Germany, I've done the services in Germany, thereafter I visited India. During my visit only I've received the payment. That is called as first receipt. If it is first received in India, that also will form part of the scope of total income of NR. So, non-resident, very simple, either income have to be accrued in India or it have to be first received in India. Then what is the third one? RNOR. You are a resident but not ordinary resident. First one, income accrued in India will form part of the scope of total income. First received in India also will form part of the scope of total income. And one more thing is there. Income accrued outside India due to business control from India or profession set up in India also will form part of the scope of total income. Pretty simple, friends. If you are an RNOR, then income accrued in India, first received in India, similar to the NR. Okay, similar to the NR, accrued in India, first received in India will form part of the scope of total income. Plus one more thing is there. What is that? Income accrued outside India due to business control from India or profession set up in India. You have some business which is getting control from India, or you have a profession which is set up in India. Due to that only you got a assignment overseas. You have done that assignment overseas, received the payment. So you have received or you have accrued an income outside India due to your business control or profession set up in India. In that case, that also will form part of the scope of total income if you are an RONOR. So what we can say is, if you are an RNOR, then scope of total income is like NR plus one more thing. What is NR? Accrued in India, first received in India, same as that of NR. Plus one more thing. What is that? Income accrued outside India due to business control from our profession set up in India also form part of the scope of total income. This is what is section 5. So based on the residential status, we need to know what exactly is the taxable income or how to compute the taxable income in India. And these two are the most important topics from chapter number 2, that is section 5 and section 6. Section 5, scope of total income, and section 6, determination of residential status. And I hope both these sections are super clear for you. Now we have some questions to solve. Before we move on, I've selected some important questions out of this topic and we have to solve these questions as well. Okay friends, so moving on to the question number 1, Mr. Madan, a citizen of India and Karta of an HUF, is employed in Messrs PCS Private Limited and he is drawing a monthly salary of 65,500 in India. So he is drawing a salary of around 65,000 in India. On 1st June 2024, he purchased one residential property in Mumbai for 18 lakh. So he purchased the property in Mumbai for 18 lakh in his individual capacity. And the market value of the property is 32 lakh and the value for the purpose of charging stamp duty value is 23. So you purchase a property and the property's actual consideration is only 18, but the stamp duty value was 23. So he bought a property for 18 and its stamp duty value is 23. On August 31st, 2024, he was transferred to the branch office of Messrs PCS Private Limited in USA. And he left India on 1st September 2024. So he left India on 1st September 2024. Overseas branch paid him a salary of 2,500 per month in USA. So he got a transfer. He was basically an Indian citizen and now he left India for the purpose of his employment. Okay. So identify the type of SSE. Indian citizen left India for the purpose of employment. So for this person to become a resident in India, only one condition is applicable, that is 182 days or more stay in India. So this is what I'm telling you. First, when you read a question, you need to identify the type of SSE that they are testing in the question so that you can save your time, score more marks. Okay. Now, he managed business of HUF from USA when he was not in India. So, he had also gone out of India for 99 days and 201 days in the previous year 23-24 and 22-23 respectively. He had never gone out of India prior to that. So he visited India from 1st January 2025 to 15 January 2025. So in that year, he visited again for the training on a project and received 15 days salary in India as per his Indian monthly salary before being transferred. Mr. Rajiv, one of its friends, gifted him a sculpture in India on August 10, 2024. The market value is 41,100. Determine the residential status of Mr. Madan and his HUF. And compute the gross total income of Mr. Madan for the assessment year 25-26, assuming he opted out of default tax rate So he have opted out of default tax regime means he wants to pay taxes as per the normal provision. He have no plans to go for 115 BAC. Value of $1 may be taken as 70 rupees. So this is actually a past exam question which is tested in the year September 2024, that is for 4 marks. So first let's determine the residential status of Mr. Madan. So we have identified the type of SSC. So what is the type of SSC? Mr. Madan is a Indian citizen, left India for the purpose of employment. Okay. So what we need to do is we need to count his days of stay in India. So let's count his days of stay in India. For that, let's go to that question and write the answer. Okay, we will read the question from here itself. All right, friends. So tell me, what is the first thing that we should do? Let's count his total days of stay, because he is being an Indian citizen. We can write Indian citizen, left India for the purpose of employment. So for becoming resident, 182 days or more stay in India. That is only condition applicable for him. So for the first thing is, let's count his days of stay in India. He was in India and he left India on 1st September 2024. All right. So for the whole April he was in India. So April 30, May 31, June 30, July 31, August 31, September 1st. So then on January 2025 he visited again. On January 2025 visited again for from 1st to 15. So 15 days was there. So in January another 15 days is also there. So that also we have to count. So in January another 15 days. So how much is the total altogether? Let's count the total number of days, and that will be 30 plus 31 plus 30 plus 31 plus 31 plus 1 plus 15. Altogether that is 169 days. So 169 days is his visit in India. It is less than 182. So his status is non-resident. Non-resident. So Mr. Madan is basically a non-resident. And we need to compute the residential status of HUF as well. So residential status of HUF is based on the control and management of its affairs. Whether it is wholly in India or partly in India, it will become resident. So only on 1st September 2024 Madan left India. So till 1st September 2024 Madan was in India, and hence we can conclude that the HUF was getting control, because Karta is the main person who controls the HUF. The HUF was getting controlled by Mr. Madan being the Karta. Till 1st September Madan was in India. So the control and management is anyways partly in India. Whether it is not fully controlled from India or not, it is anyways partly in India, because the Karta was in India till September 1st. So control and management is partly in India. So HUF will become a resident. The HUF is a resident. Now you need to check whether HUF is ordinary or not ordinary resident. For that you need to check the residential status for Karta for the past 10 years. Past 10 years means in this question they have tested relevant PYs 24-25. We need to check the residential status of Karta for the year 23-24, 22-23, 21-22, 20-21, 19-20, 18-19, 17-18, 16-17, 15-16, 14-15. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 years. So as you all know, they have given some information in the question. See, he had also gone out for India 99 days in 23-24. 23-24 he left India only for 99 days. That means he stayed in India for how many days? 365 minus 99. That will be how much, friends? So let's take that also. 365 minus 99 will be 266 days he was in India. Then in the year 22-23 he left India for 201 days. Left India for 201. That means 201 it will be 164 days he was in India. For the entire other years he was in India for 365 days. Anyways, 9 out of 10 he will not become a NR. Why? Because in 23-24 he is a resident. 21-22 is a resident. 2021 he will become a resident because the whole year he was in India. So 9 out of 10 NR is not going to happen. 729 days or less in the past 7 years is also will not happen because past 7 years means 1, 2, 3, 4, 5, 6, 7. Anyways, 365, 365, 365. By this itself, it goes beyond 729. So this Karta is not an NR for 9 out of 10. And Karta's past 7 years days of stay is not less than or equal to 729. So what we can conclude is HUF is a resident and ordinary resident because HUF is getting control from India either wholly or partly. Plus Karta is not satisfying 9 out of 10 as well as 729 days or less stay in India. So HUF will become ROR. Karta is a NR. Now the Karta's personal income information have been given. You need to compute the total income of that Karta as well. Alright. So how to determine the total income of Karta? For that we require more information from the question. So they have given some information in the question. They are saying about, first of all, the Karta have purchased a residential house property. So basically that will come under IFOS. And the stamp duty value of the property purchased by Karta. Karta means Mr. Madan is how much? 23 lakhs. Actual consideration paid is 18 lakhs only. So he getting a benefit. He purchased the property having a value of 23 lakh for 18 only. And how much is the benefit? 5 lakhs. That's the difference, or we can say the benefit. So under section 56 subsection 2 clause number 10 under IFOS, if you are purchasing an immovable property for a consideration which is lower than its stamp duty value, then you need to check two things. What is the difference between the SDV and actual consideration? That is, if that is more than 50,000 plus your SDV should be more than 110% of actual consideration. If both the conditions are satisfying, then difference have to be taxable under IFOS. Let's check. Stamp duty value was 23 lakh. Actual consideration is 18 lakh. Difference is 5 lakh, which is more than 50,000. Plus SDV is 23 lakh and actual consideration is 18. 18 into 110 percentage. How much is 18 into 110 percentage? That is 19.80. Your SDV is more than that. So we can conclude that this 5 lakhs will be taxable under IFOS under 56 subsection 2 clause number 10. Even if he is an NR, this property is actually in India. So this income or this amount of 5 lakhs is actually accrued in India, hence taxable in the hands of this particular non-resident. Now, not yet over. He received salary income also. So salary income from India. How much is the salary income that he got from India? For the April, May, June, July, August, till August 31st, he was fully in India. So how many days, how many months it is? 65,500 was the monthly salary into April, May, June, July, August. September is not there, so 5 months. Plus, he came on January 1st. For 15 days, he stayed in India and done something. For that 15 days period, he got a proportionate salary of his Indian salary income. That's what they're saying. So, going back to the question, he visited from 1st January to 15th January 2025 for trading on a project and received 15 days salary in India as per his Indian monthly salary before being transferred. So, he gets additional 15 days salary also. So, 65,500 was 1 month salary. January, there was 31 days into 15 days. And how much will be that proportionate amount? 65,500 divided by 31 into 15, that will give you 31,000. This sum is 31,694 plus how much is this amount? 65,500 into 5, that will be 327,500. That plus 31,694, that will give you 359,194 minus, you can claim standard deduction. Since he have opted for the old slab, you can claim standard deduction of 50,000. If he has opted for BAC, then the standard deduction would have been 75,000. Okay. So this minus 50,000 and you will get 3,09,194. So 3,09,194 plus 5 lakh. His total income shall be 8,09,194 shall be his total income from Indian source. This is what is the final answer to the question. So 194. Yes. So I hope this much is clear for you. So friends, moving on to the next question, that is question number 2. We have two more questions. Mr. Sarthak, an individual, an Indian citizen living abroad, Dubai. Sarthak is an Indian citizen leaving Dubai at tax haven. So Indian citizen residing outside India in a tax haven. So the possibility is deemed resident. Since 2008, see, I have never visited India. So number of days of stay in India is not required for a person to become a deemed resident. Okay. So never came to India for a single day since then. Earned the following incomes during the previous year 24-25. So identify the person. Indian citizen residing outside India in a place where he is not supposed to pay any taxes. So he can become a deemed resident, but one condition is there. His total income from Indian source should be more than 15 lakh. Income accrued or arised in Dubai, not taxable in Dubai, being a tax haven, 20 lakh. Should you consider this 20 lakh as a part of Indian source income? You tell me, what is that definition for total income from Indian source? Total income from Indian source means income accrued in India plus income first received in India plus income accrued outside India due to business controlled or profession set up in India. Hope you remember. This should not be considered as a part of income from Indian source. Second one, income accrued in India, you have to consider. Income deemed to accrue arise in India, you have to consider. Income accruing in Dubai from a profession set up in India, that also you have to consider. So 10 plus 8 plus 5, that will be 23 lakhs. 23 lakh is his income from Indian source. So you tell me, Indian citizen residing outside India in a place where he is not supposed to pay any taxes plus having total income from Indian source more than 15 lakh, he shall become a deemed resident. Deemed resident, and he is a RNOR. Why RNOR? All the deemed residents are always RNOR. So let's go to the question. Determine the residency status of Sarthak. Status is RNOR. And taxable income for the previous year 24-25. If he is a RNOR, then for an RNOR, which all are the income that forms part of scope of total income? Income accrued in India 5 lakh, income deemed to be accrued in India 8 lakh, income accrued outside India due to business controlled or profession set up in India 10 lakh also have to be considered. That means 23 lakh is the total income from total income of Mr. Sarthak in that case. Question number 2 in that. What would be our answer if income arising in Dubai is from profession set up in India is 2 lakh instead of 10 lakh? If this is 2 lakh instead of 10 lakh, what would have been your answer? Very simple. If it is 2 lakh, then 8 plus 2, 10 plus 5, it will be 15 instead of 23. If it is 15, then he will never become a deemed resident, because to become a deemed resident, income from Indian source have to be more than 15. Exactly 15 will not become a deemed resident. So his status will be non-resident because he have never visited India since 2008. So he will become a non-resident. If he is a non-resident, how much will be his total income taxable in India? If he is a non-resident, income accrued in India will form part. Income deemed to be accrued in India also will form part. Income accrued outside India will not form part. So 5 plus 8, it will be 13 lakhs. If he is a non-resident, his total income shall become 13 lakhs because 5 plus 8 only you have to consider. You don't have to consider income accrued outside India. For an RNOR, you have to consider income accrued outside India due to business control or profession set up in India. For an NR, you don't have to consider. Case 3. What would your answer if Mr. Sarthak is born in Dubai? Born in Dubai means citizen of Dubai. Citizen of Dubai. It is not necessary that you are born in Dubai, you will become citizen. But we are assuming that he is a citizen of Dubai and his parents were born in India. So he is an Indian origin. What if the answer is he is an Indian origin? If he is an Indian origin, then he will never become a deemed resident. Why? Because deemed residency status is applicable only for Indian citizens, not citizens of Dubai. Practically a person, if you are a person born in Dubai, doesn't mean that you will get a citizenship in Dubai. But in this question, what their intent is, if you are a person born in Dubai and you are becoming a resident in Dubai, then what will be the answer? Your answer will be very simple. Deemed residential status will not be applicable. Why? Because deemed residential statuses are applicable only for those persons who are Indian citizens. So I hope you got that point as well. Now we have one more question, and this is basically November 2022 6-mark question. Okay. So moving on to the last question in this series, that is question number 3. What is that? Mr. Dhanush is an Indian citizen, age 35 years, worked in ABC Limited in Mumbai. So Indian citizen, worked in Mumbai. He got a job offer from XYZ Incorporated USA on 1/6/2023. So in 2023 he got an offer and he left India for the first time on 31st July 2023. So he left India in the year 2023-24. Okay. Now during 24-25. So in the year 24-25, you identify the person being an Indian citizen residing outside India. Comes on a visit to India. That will be his category. Comes on a visit to India. So you are a person residing outside India, comes on a visit to India, will be under that respective category. So because you have left India in the year 23-24 and in 24-25 next year you are residing outside India and you are coming on a visit to India. So identify the person. What is the type of person? Indian citizen residing outside India, comes on a visit to India in 24-25. So determine the residential status of Dhanush and compute his total income. So if you are a person, that means an Indian citizen residing outside India, comes on a visit to India, then to determine your residential status, 2 conditions are there. Number 1, 182 days or more is there. Now, if your total income from Indian source is more than 15 lakh in the relevant PY, one more condition is there, that is 120 plus 365. So first of all, let's compute his total income from Indian source. Salary from XYZ Incorporated USA, you should not consider. Not accrued, not received. Dividend, you should consider. Agricultural income exempted under 10 subsection 1, so you should not consider. Rent received from property in Lucknow, 4 lakh minus standard deduction. You will get a standard deduction at 30%. How much is 30% of 4 lakh? That will be 1 lakh 20. How much is 4 lakh minus 1 lakh 20? That will be 2 lakh 80, right? So 4 lakh minus 1 lakh 20, that will become 2 lakh 80,000. So effectively you should take only 2 lakh 80. Then profit from profession in USA which was set up in India. You have an income accrued outside India, but due to profession set up in India, that also have to be considered. So 5 lakh 50 plus 2 lakh 80 plus 6 lakh. So let's 2 lakh 80 plus 6 lakh plus 5 lakh 50. That will be 14 lakh 30,000. So total income from Indian sources 14 lakh 30, which is less than 15 lakh. So 120 plus 365 day condition is not applicable. For him only one condition is applicable, that is whether he has stayed in India for 182 days or more. Now let's count the number of days. He visited on 25th May 2024. 25th May 2024 means on May 25, 26, 27, 28, 29, 30, 31. 7 days. June for the whole month, July for the whole month, August for the whole month. September he left on 22nd. So 22 days in September. So let's count the total number of days. 7 plus 30 plus 31 plus 31 plus 22, and that is 121 days. 121 days. But 120 plus 365 day condition is not applicable. Why? Because his total income from Indian sources less than 15 lakh. So 121 days is less than 182 days or more. Hence his status is non-resident. This is how you will be able to solve the answer if you study this concept in the right manner. You understood or not? So first of all, you need to identify the type of SSC that they are testing. Based on that only you apply the conditions, whether it is 182, whether it is 60 plus 365, whether it is 120 plus 365, or whether it is deemed resident. So always identify the SSC. Now compute his total income as well. If he is a non-resident, then which all are the income that form part of his total income? Let's see. If he is a non-resident, then which all are the income that will form part of the total income? Let's consider. First one, that is income from salary which is USA, received in USA. You should not consider. Dividend, you should consider 5 lakh 50. Agricultural income, again exempted, you should not consider. Rental income, after standard deduction, 2 lakh 80, you should consider. Profit from a profession in USA, which was set up in India, received there. That means you have a profession set up in India, but you have earned an income in USA and received in USA. You are a non-resident, right? So this also you should not consider. If you are an RNR, you should consider that. Since he is an NR, you should not consider that. So how much will be the total income? 2 lakh 80 plus 5 lakh 50. So 2 lakh 1, 2, 3, 4. 80 plus 5 lakh 50. That will be 8 lakh 30,000 will be his total income being an NR. This is how you have to find out the answer to the question. Again, it is an RTP question, November 2022. Apart from this, those students who are using our workbook means the question and answer book, have to solve some more questions. I'll give you the list of the questions that you have to solve from the workbook. So from the practice workbook, that means our pink book. Okay. From the practice workbook, you take page number 38, question number 40 and question number 39, same page 38. Then page number 33, you solve question number 35 and page number 27, you solve question number 28. So make a note of these questions. These are wide variety conceptual questions. You solve this much and you follow this theory, this is sufficient, because this analysis that we have prepared based on the past 10 examination question paper. So these are the frequently asked areas in the past 10 examination question papers. So just follow this, you will get a very good score in your paper 3A income tax laws. So I hope this session was useful for you. All the very best and see you on the episode number 2.